Good morning, everybody. It is Thursday, May 23rd, 8:45 a.m., and we are here back again for another market open. Casey, I love this comment right here, bullish on life. You got to be bullish on the stock market. You got to be bullish on some Nvidia at $1,000 a share in the pre-market, $1,017.53 to be exact. And we've got to be bullish on overall life. Last earnings, or yesterday's earnings for Nvidia. I mean, we're going to go through it today, but it was nothing short of incredible. I mean, incredible is not even the right word to describe what we saw in those earnings. Those earnings pretty much set up, I believe, the next wave that we're going to have in the summer months for this bull market rally that we are currently in. S&P 500 is 533 right now in the pre-markets. Absolutely incredible to see the S&P hit new highs. The QQQ is hitting some levels in the pre-market. We are at 461 on the QQQ. And then good old Nvidia, $1,000.16 right now in the pre-markets. Yesterday's earnings, and we'll talk about it. It was just one of those earnings where you look back and you realize that, even at 930, 940, everyone felt, all right, Nvidia's getting kind of pricey at $900. Stock is up more than 100% year to date. And the reason for that is because up 7% right now in the pre-market, which is about a little bit more than $70 billion, about $150 billion move. The reason for that, from a market cap perspective, the reason for that is because Jensen Huang said we are not only doing a 10-for-1 split, which is getting people excited. We are not only beating our earnings expectations by $2 billion, really $4 billion. If the earnings expectations hadn't increased, they would have had $26 billion in revenue against 22 as the expectation. This time it was 24 against the expectation. But also, they have worked on their next chip, which is called Blackwell. The chip after Blackwell. We all know about Blackwell. It was presented at the GTC conference. They're ready to go for the next chip. And the reason I bring that up as we get into our Nvidia coverage right now is that is why I think the street's giving it the multiple. Basically, Nvidia said, if I had to sum up what we got from the earnings yesterday, they're not done for a while. One could argue they have another 2 years left of real extreme growth, maybe not 262% year over year every single quarter, but maybe triple digits every single quarter, definitely high double digits, 80, 90% for the next, you could argue, 5-6 quarters. And so definitely in Q3 or Q2, they're guiding for $28 billion in revenue. Profitability is probably going to be close to that 58% margin. For every dollar Nvidia brings in, they make 58 cents of profit. It was an absolutely exceptional quarter. We're going to have a lot of coverage. We're going to hear from Jensen. We're going to talk about the implications of what it has on Tesla, the Max 7, etc. But if you don't own Nvidia, I don't really think it matters. If you own anything in the stock market, you needed Nvidia to prove that this bull market rally, which is a incredible bull market rally, up more than 12% year to date within the first 5 months. That usually does not happen. I mean, this is a one-of-a-kind year that we're having. Even last year, 2023, we did not have this much this quickly. Nvidia has proven that there's a level of prosperity and wealth generation that is being created via technology that cannot be ignored. And in any other stock you may have, you are somewhat benefiting from that, which is why it's really good for the entire market. So we got a lot to talk about, a lot to discuss, and we'll see what we get into. Thank you, everybody, for being here today. Bay Ray, Broccoli Bob, Hines, Max Deuce, Yeti, Nvidia sell-off today. We'll talk about the potential of Nvidia sell-off as well. I think up 7% in the pre-market. It's going to be hard to collapse 7%, especially as people are getting in. I mean, even I feel tempted just to buy a share for the hell of it so I can get 10 shares because for that stock split. So, I mean, it's incredibly exciting, and it's going to be super cool to see how this plays out. Christian, Valero, Tesla, Nicholas, Iceman, JJ, Rex Jet. Kumar says, Amit just woke up. Peer pressure is heavy. I did not just wake up, but my hair looks like it just woke up, right? I kind of like how it's just like flowing. It's very curvy. Oh, by the way, I bought a bike yesterday. I'll show you guys a video of that. I bought a bike. I don't know. Nvidia goes up, 7%. I did buy the dip on Nvidia at 770. All of you guys were afraid. I was using your fear as my alpha. And so the dollar that I put into Nvidia is now up $1.30. So I really felt like I deserved to buy a bike. I'm Beneficial, Ray, Super Reynald. How many shares of Nvidia do you have? I have $1 of Nvidia. Brandon, Carbine Collector, Midwest, Zach Wagner, jobless claims. We'll talk about that. Those came in pretty okay as well. Jobless claims were not as bad. So that was some big macro news. Definitely not affecting the market to the downside. It's going to be exciting, dude. It's going to be an exciting day. June, Michael Wilder, Paul Gogan, Katie Baby, I'm Beneficial, thank you all for being here today. Not a motorcycle. No. Dude, if I bought a motorcycle, my mom would kill me. Dude, my mom was like, she wasn't upset about the bike, but she was just like really worried that I was like going to fall off the bike and like kill myself. So she was like, please be careful. If I got an electric motorbike, dude, there is no way, dude. She would be so scared. She'd be so scared. Okay, cool. Let's get into the markets. We got a lot to talk about. I think let's start off with this clip. This clip was the most epic clip last night. For those that haven't seen it, it was hilarious. Dan Ives on Nvidia, and he kind of called out Ross Gerber for being super bearish yesterday before Nvidia's earnings. Let's take a look at this, and then we'll keep going from there.
You've been pounding the table on it.
I mean, I believe this is really this AI revolution that's playing out. And it's not just for the godfather of AI, Jensen, Nvidia. You look across tech, we're going to be talking about $3-4 trillion types of valuations in tech. There is no slowing down. Brian, I think even the bulls, this is a drop the mic quarter in terms of this. And look, you have bears out there, of course, like Ross Gerber and others on valuation. But I think this is just starting. It's a 1995 moment, not a 1990.
I guess if I had to poke a hole in the story, I would say, because I'm the energy guy, right? Are we going to be able to make enough power to power all these things? Do they have the manufacturing capability to make all these things? Or do they start to get such a backlog, Dan, that customers do start to look elsewhere? Because, like, I don't want to wait 5 years, right? And I'm not Meta, and I'm not Google, so I'm not at the front of the line. Is that a concern at all?
I don't think that's a concern, and I don't think customers have anywhere to go, quite frankly, even if they did have that concern.
Not a concern for I'd say another 2, 3, 4 years. So for now, the runway's there. And I could just tell you from our Asia checks even this week, it has dropped the mic in terms of what we're seeing from a demand perspective. And that's bullish for the rest of tech. And that's why tomorrow, if you're a bear, you go deep into your hibernation mode, into those caves, because that and valuation, that's not going to save you.
Okay, well, you guys all stick around. We're going to add a voice and one name that you just mentioned. Okay, you had a little bit of a mini Twitter spat with one of our guests last night after they said this.
I think Nvidia is fully valued at the current price. I think their numbers will meet or beat expectations, but it's going to be really hard for the stock to move higher on the short term because a lot of this is priced in.
And Gerber Kawasaki President and CEO Ross Gerber joins us now. And Ross, I'll say this, okay? Because I think in some ways you kind of got it right. Dan will disagree. The most unbelievable quarter in the history of quarters, and the stock is not moving that much.
Well, no. First of all, I want to make it perfectly clear. I am not a bear, okay? I am super bullish on Nvidia. We own 125,000 shares of Nvidia. It's the top holding of my ETF GK. It's the top holding at my firm. So by all means, I couldn't be happier with Nvidia's performance, but I'm also a guy who runs a business and owns a business, and paying 25, 30 times EBITDA for a business is a really, really great valuation. I thought 1,000 would be, sort of where I wanted it to be, and now we're there. And that's what I say. I think it's a lot of this is valued in the stock. Now, I hope it goes higher, and I hope they keep beating and beating. But I've been in Nvidia for 10 years, and I can tell you, these are cycles, and this cycle will have a point where it inflects.
It's really funny he says these are cycles when for the past 10 years, it's been relatively good. Now, it was flat the first 5-6 years, and then it kind of broke out. I do agree. It is a cycle, but what NVIDIA is showing in the demand and what they talked about in their earnings shows that this cycle, if it has a peak, I don't know if it's like next quarter. I don't know if it's the quarter after that. And I think that's what Dan Ives' quibble is with Ross. He's like, dude, if this is a cycle, we got a couple years left to go before it happens tomorrow. Gerber thought today's earnings would be good, but it wouldn't really move the stock at all.
At some point, and we just don't know when.
I would say, but look, the reality is Ross, like many others, went into this quarter driving 45 miles an hour in the right lane in their minivan. And
he just said he analyzes stocks like a soccer mom. That is disrespectful, and I love it.
Underestimated.
It's a Rivian now.
Dan, I got 10% of my money in Nvidia. What are you talking about? I'm driving a Cybertruck, not a minivan.
But they underestimated, and I think as the Godfather we heard spoke, the demand that we're seeing, it's just starting. Because this is really what I view as the first, second inning of what's going to continue to play out, being led, of course, by Jensen as well as Microsoft and what we've seen with the Dell. That's why, in my opinion, when you look at NVIDIA today, you get that popcorn ready. It's just starting in terms of this run.
I really hope you're right. I really hope you're right. I think there's a long runway for AI. I agree 100%. And that's why I fundamentally don't disagree with what you're saying. It's just, I actually manage the real dollars. You're an analyst. It's a little bit different because I have to explain to my clients, why they have 20% of their portfolio in one stock. And so we have to be prudent investors, and Nvidia trading at 30, 40 times forward earnings is this historical multiple. Now, maybe it deserves 50 times forward earnings. I don't know. The market will determine that. But we're very bullish on Nvidia, and we're very happy with its performance. And we're not selling any more than keeping our allocation at around 9 to 10%, which is where
I mean, look, it's a fair point. I'm not going to say that Gerber is totally wrong here, because at the end of the day, he is managing real money, whereas Dan, doesn't have to actually allocate client dollars. And when you're managing a couple $1 billion, it's kind of scary if, a lot of it is in one position. But the problem is, going into this quarter, you're kind of judged on how you analyze, if you're a money manager, how the quarter is going to interact. So I think Dan got it the most right out of most people. I mean, the other thing is Cathie Wood as well, dude. The Cathie Woods of the world, and it's not just her, but the people that felt that big tech, we're talking about the NASDAQ, Amazon, Meta, Microsoft, Google, Nvidia, etc., can't produce the types of numbers they're producing because they've already run historically over the past 10 years. And that's why the Zooms, the Rokus, the Teladocs, those are the next beneficiaries of AI revolution, right? I think it looks like they're turning out to be wrong. It's not like those companies aren't going to benefit from AI. Zoom's just not, because Zoom grows 2% a year at this point. But Nvidia is going to keep winning. Amazon's going to keep winning. Microsoft's going to keep winning. And the reason for that is because they have the money to actually hyperscale, which is why they're hyperscalers. And they're the only ones on the planet that can afford to pay Nvidia and get to the front of the line when it comes to fueling what Nvidia is trying to provide them with in terms of the AI infrastructure to power their models, which powers their services. So it seems like this is a story about the NASDAQ, about the QQQ, about big tech continuing to be big tech. And anyone that wants to enter big tech has a very high barrier to entry. And it seems like that's what Dan Ives has been saying over the past couple of weeks in regards to what's going on for Nvidia. So it's really exciting to see how this is playing out. And obviously, Nvidia has done a hell of a job. Elon shared a tweet this morning about Jensen Huang talking about Tesla as well. Let's take a look at that. That's a really short clip, and then we'll keep going.
Well, Tesla is far ahead in self-driving cars. But every single car someday will have to have autonomous capability. It's safer, it's more convenient, it's more fun to drive. Well, Tesla is far ahead.
So that clip right there, Jensen just says basically, every car is going to have some type of automotive capability. And the interesting part about what Nvidia did is that they're powering a lot of the cars that are going to have any automotive autonomous capabilities. Tesla is just the one that's in the lead, and they're buying the most H100s from Nvidia. Now, in terms of Nvidia's actual earnings, these are the numbers for those that missed it. Revenue's up 262% year over year, 26 billion. Gross margins are at 78%. Those are software types. So software gross margins are closer to 84%, but still incredible for a hardware company. Operating income, 18 billion. That's up 500% year over year. Net income, 462% year over year, 15 billion. So for every dollar they bring in, they get 58 cents, 15 billion off of 26 billion in revenue, and then diluted earnings per share at 612, up 461% year over year. I think what also got the street very excited is the fact that they are doing a stock split, and that stock split is going to get people to be excited. One of the things that's going to get the stock split to get more people into the stock, and as a result, bring more money into the company, is the ability to sell options, right? If you have 100 shares, you can sell a covered call. Whereas you can't sell a covered call on Nvidia if you have one share, because that's not how covered calls work. But if you have 100 shares, which, at this point, it would be about $10,000 at this price to get 100 shares. 10 shares at the current price would turn into 100. You can sell covered calls and you can make some extra side income. And so that incentivizes a little bit more of the options market. Right now, if you wanted to have to do 100 shares, you would have to have literally $100,000 inside of Nvidia, which is not as easy for the average person. And so obviously this was really good. Nvidia hit $1,000 a share right at 5:15 p.m. yesterday. And since then, it continued to gain its momentum. And now we see Nvidia closing in on maybe $1,020 per share. Here's the question for you guys. Do you think that Nvidia actually keeps this gain this morning? Or do you think they give it back to the market? I think there's a shot they give it back to the market. So we go down, we're up 6%. Maybe we go down 3%, and then we're only up 3%, which means we're at 985, 990. I think that's possible. But I think the trend is to the right because people are realizing that if they don't get in now, the split's only going to get more expensive, and then it's going to turn to 120, 130, even if at that point it's getting a bit overvalued. If the guidance for Q3 or Q2 is 28 billion, and Jensen quite literally said, hey, after Blackwell, we have our next chip done. That's when the stock really took off yesterday. If you were on the earnings streams with us, because Jensen basically said there's no reason to worry. Like everyone's concerned that this is all cyclical. Yeah, it's cyclical, but it's not cyclical for a while. And if it's not, then you got to get in. Like this is going to be a $4 or $5 trillion company is the implication of what Jensen was saying. And so the street's excited about it. So I think we kind of keep this momentum unless people want to take profits. We do have Friday tomorrow. Maybe people take some profits before Friday. But even if this thing falls down to 960, 970, 950, 900, 840, it's a ridiculous buy the dip, right? And so people are going to be excited to get back in. There's going to be support at a lot of levels to get into the stock. Enphase right now is up 1% in the pre-markets. QQQ up 1%. S&P 500 is up about 1%, 0.73, 533. Could you imagine we get to 540 on the S&P 500? I mean, it's going to be absolutely incredible to see how that one continues to go further. Bitcoin at 69,000. PayPal's up 0.5%. HIMS, there was an insider who bought about $2 million worth of HIMS yesterday. HIMS right now is up 3%, but it gave away most of their gains from that $20 increase for the GLP drugs. So HIMS not really maintaining a lot of their momentum, but still insider buying is really nice. For the first time in 2 years, we saw an insider buy for HIMS. And then we have Snowflake up 5%. We'll talk about Snowflake in a bit, but overall, it was a hell of a quarter for Nvidia. June says Jensen saying that is huge. He's going to have a lot of political sway in convincing the government to change policy. Yeah, if he believes in Tesla and he can tell the Democrats and Republicans, hey, we got to open up the regulations to get Tesla to work. I mean, this guy's controlling the economy. Literally, if you're President Biden, you need to have Jensen Huang on speed dial. If you're Trump and you're the next president, there is no way you are not communicating with him. Jensen Huang, you could argue, is the most powerful man on planet Earth because his economy or his company controls the fate of the U.S. economy, which controls the fate of pretty much every other economy. And forget the U.S. economy. If they stop innovating on AI and don't push it further, the entire sort of industrial AI revolution takes a backseat. So it's going to be really important for Jensen Huang to keep doing what he's doing. Microsoft is at all-time highs. Let's take a look at them real quick. They are at, 434 on Microsoft. So the entire market, let's look at the Mag 7. We got Faraday Future down 2%. Apple's up. Microsoft's up. Meta's up. Google's 178, Amazon 184, Nvidia again up 6%. Even Tesla is up a little bit on this at 181. Palantir getting a little bit of the Nvidia boost. We're up 1.56% on Palantir at 21.50. Let's see if we can make our way back to $22 on Palantir. But if Nvidia goes higher, we'll see if that has any implications for Palantir. Robinhood, this is also going to benefit Robinhood. Robinhood up 1.22% in the pre-markets. Why? Because Nvidia is a top 10 holding on across Robinhood users. So Nvidia's up 6%. Assets under custody going into Q2 is going to be up for all the people that own Nvidia on the platform. That's also going to help other companies that they own if Nvidia lifts up all these other companies. And in general, trading volume should continue to go higher because people want to trade because it is still a bull market. So this was a really important earnings for Robinhood as well. And so it's nice to see that momentum happening or helping Robinhood. Nvidia here at $1,012 right now in the pre-markets. We did have Tom Lee on CNBC today who had some thoughts to say about Bitcoin. So we'll transition to a little bit of macro Bitcoin and then we'll keep going from there. Here's Tom Lee speaking on AI and some of the Bitcoin news that we got today. Let me just pull this up right here and let's share this. Then I got to show you guys my bike video because I got a new bike. Here we go. Here's Tom Lee.
I don't know. It was 50. I think it was at 57. It's back to 65 before you can blink.
That's right. I mean, Bitcoin's still, we think, early in an upcycle. So the idea that it could get to like 150,000 this year is still, within our base case. And
150,000 in 2024 is your base case. All right, go on. I didn't.
And
go on. Go on.
Yeah, go on. Don't stop. Don't stop.
Yeah. I think it does help that the Fed is reiterating that its view on the inflation and it's being relatively dovish is more dovish than where the market is. So I think that's the process of why markets are recovering.
because I know when they tell me wrap it up and how people always get mad on, you say you're going to come on Twitter and everybody gets excited, and then you're never on long enough for these people on Twitter. Should I pay attention to
Can I
them?
just ask one more?
Yeah, please.
And it has to do actually with what I saw when I was in Omaha this weekend with Becky. You know, one of the things Warren did was he trims this Apple piece. And I think underneath a lot of the language that he spoke about for 5 hours, there was some anxiousness about the overall economy. You don't have that anxiousness. He's in there, has this massive portfolio, sees everything. What do you think of that?
I understand where he's coming from. I think if someone said, what are they anxious about? It is the fiscal deficit, the size of the deficit.
I'm not even sure he's anxious about that, though. I mean, he's anxious about that long term, but he was even asked about that, and that was not his issue. I think his issue was fundamentally, I don't want to put words in his mouth because he didn't say it. There's a lot of tea leaf reading, but just about the strength of where the market is right now and whether it's potentially overpriced.
Well, you know, he's steering a huge ship. So, you know, he has to think in, you know, longer term. But to us, earnings growth is accelerating. You know, Q1 earnings are up 7%, but, you know, 3 groups are down 20%, you know, energy, healthcare, materials. Those energy and healthcare flip to positive next quarter. So earnings growth hits 11%. We know there's a lot of pent up demand. Capital spending is picking up and the ISMs are turning up, and there's $6 trillion of cash on the sidelines, and people have been cautious for more than 2 years now. So I think the risk reward's still pretty good. You know, I don't know if maybe Warren's lens is more 10 years out, and that's when you can be cautious, but I think the next year looks good.
So this actually might have been a clip from last week that we never watched on the show, but it actually brings a lot of context to the next thing we're talking about, which is the macro, right? So Tom Lee's, the basic argument he was making is that you should buy in May versus sell in May, and he was right. I mean, May, we still have a week left in May, so we'll see how May plays out, but so far it's been pretty incredible. Here's a chart I showed on the market close yesterday that people might not have seen, or maybe I showed this on the market open, but just a quick review of this chart. A good first 100 days could mean a really good rest of the year. So if the S&P is up more than 10% year to date on day 100, which is today of the trading year for 2024, the average rest of the year goes up about 9%. The median is about 10%. We are only up currently 48%, right? So there's still more room left to go, and there's also potentially another 8% left in the S&P 500, which would mean we're looking at 560 to 570. We're actually looking at 575 on the S&P 500 if that chart ends up being true. So we'll see what happens. But right now, going into the market open, if investors continue to gain the momentum to buy Nvidia, then it doesn't look like this is slowing down. Now, we also had some other earnings yesterday. Let's talk about that. Elf Beauty. Elf is actually up 5%, and I think Elf should be up 5%. Elf went down about 10% yesterday after earnings to 135. You can see that red candle right there. It's not really red, but you can see it went to 135. And then we bounced up here to 164. And I think the reason for that is because the market realized that the results were actually pretty damn good. They grew sales 77% year over year. They're going to grow less than 77% for the next year, but I don't think that's enough to punish them, given, you know, a company can't keep growing 77% forever. And as a result of that, the market actually bought the stock, and Elf is doing well. Ulta is up a little bit on this. Ulta, it does seem there is a divergence between Ulta and Elf. Ulta, you know, said that their same store sales were going to be down for the rest of the year. Elf correctly said that their sales are going to be down, but it's going to be down on a comparative basis, not on a relative basis. They're still relatively doing very well at 24% year over year. So Elf's up 6%, which is nice to see. Another consumer company that is around makeup did well. Target right now, down or flat. It was down 8% yesterday. A lot of people have been saying the consumer is weak. Let me pull up the jobs data right now as well, and says, you know, the consumer can't afford things anymore. They can't afford basic things from Target. Therefore, that's one of the bear cases we have in the markets. And I don't think that's the case. I think Walmart has done incredibly well. Target had to lower prices on 5,000 items. The reason Walmart didn't have to do that is because Walmart is already cheap. So the idea that Target is a signal for the consumer being weak, like, is the consumer a little weak? Sure. But I don't think they're weak to the point where we need to start worrying as like this massive bear case, because Target's just expensive for no reason. If you could buy, you know, your milk at Walmart for $1 less than you buy it at Target, people are just going to go to Walmart. And I think that's what we saw in Target's results. Walmart did not show those results. Walmart's went up 5%. after their earnings. So I think it's more of a store problem versus a macro problem. Now, here's some U.S. macro data today. Initial jobless claims were 215,000 versus 220,000 expected. Previously was 222,000, and continuing jobless claims were 1.79 million versus 1.79 million. What does this mean? That means 215,000 people applied for unemployment and said that they did not have a job this week. That is lower than the 222,000 that it was last week, and that is lower than projections from the 220,000 that the Fed projected. Now, that's a good thing because it goes back to the narrative that the consumer is strong, that there is money. And if there is money, then at least, if there are jobs, people have the ability to get those jobs. But what it could signal is, again, a little bit of a stickier path for inflation. What we didn't talk about, because it went under the radar because Nvidia produced earnings, is that the Fed FOMC minutes came out yesterday, and they basically said, hey, we do think inflation is still a concern. We are absolutely prepared to keep rates high for longer, not higher, but high for longer. And we feel that the progress on inflation has not been as substantial. Now, granted, they said all of this stuff a couple of weeks ago, so it's not like this stuff is that different, but they kind of reiterated it, and the markets actually fell. The S&P 500 went to 528 if people saw that yesterday, just on when they announced it. Can you see it right here? Yeah, you can kind of see it right here on that red candle right there at around 528. Yeah, here we go, 527 right there yesterday. So 527.60, if you can see that right here on May 22nd. We had a bit of a red candle as those Fed minutes came out, and then Nvidia produced earnings, and we just went higher. So it looks like Q1 earnings have been able to withstand the inflation fears. The job numbers we got this morning maybe makes the Fed a little bit nervous because they want to see unemployment take up to 4.1, 4.2% to really feel it's time to do a rate cut because they want to front run, the economy starting to slow down. But it doesn't look like the economy is slowing down because not that many people are applying for unemployment, which is a great problem to have, quite frankly, but it is indeed a problem to have. I mean, you got places in Italy that have like 8 and 9% unemployment rate. France has 7.5% unemployment rate. In America, it's 3.9. It's low. But in regards to dealing with inflation, it's like the weirdest thing ever that we actually need unemployment to go higher just to be able to combat some of the stuff we got on inflation. Kris says target demographics are younger than Walmart. Boomers are doing well. Millennials are not. I mean, that's a good point as well. You could argue that Target has people that are definitely probably in their 20s or 30s, whereas Walmart is 40s and 50s. And as a result of that, people aren't willing to pay some of the prices that Target put up. But again, it is a Target issue because if Target lowered those prices, then a lot of those millennials potentially would be able to buy those items. But, there is a point there that if those people don't have money, then you could say the consumer is weaker if millennials don't have the capacity to buy at Target. I go to Walmart all the time, dude. I never go to Target. Target is a scam to me. I mean, I love Target. It's cool. But like Target for my entire life has always been more expensive than Walmart. Like it's just always been like, even if it's like a couple dollars extra, it's just more expensive than basic goods. And I don't know why or how Walmart's able to get the prices as cheap as they are. Probably just because they're bigger, they have better relationships, whatever it may be. But it's always been cheaper. And as a result of that, that's been beneficial for Target. I just came across this picture on Twitter, dude. What is this? What am I seeing right here? Katy Perry is sitting on Sam Altman's lap. What is going on, dude? This guy is literally, what does he do? First, he steals Scarlett Johansson's voice. Is he trying to convince Katy Perry to steal her voice for chat? Katy Perry doesn't have a horrible voice for if she was the ChatGPT voice. I mean, Teenage Dream is one of my favorite songs of all time. Absolutely one of my favorite songs of all time. But yeah, very interesting. Maybe he's getting Katy Perry to do his thing. Okay, cool. So let's keep going into what other earnings that we had. So we also had Snowflake on, and Snowflake did what they had to do. So here's Snowflake. They had their earnings yesterday. Snowflake at 170 after hours, in the pre-market. It's a 5%. Let me bring up the CEO of Snowflake and let him explain a little bit about why they were able to have this type of a quarter and what they were able to do. So let's listen to him real quick. This, again, was the guy who was supposed to be the CEO of Google if Sundar wasn't picked. He's now the CEO of Snowflake. They, for top line metrics, they beat by 34% on revenue. The street was expecting like 25, 26%. So they definitely sandbagged their guidance. And that's why I think the street liked the results. Here we go. Here's the Snowflake CEO and what he had to say.
Data analytics companies back in February. They put a strong quarter with a tepid full-year forecast. Stock plunged. What's driving it?
Jim, I think overall, like there are two broad strokes to the quarter. One is that our financial performance was really, really good. Our product revenue was up 34%. Remaining performance obligations, as you talked about, was up 46%. Some very huge deals. It's really an indication of how much our customers believe in us. Our free cash flow margins were also amazing. The other part of Q1 is really how our product pipeline, especially in AI, has been in overdrive. Our AI products are now generally available. Over 750 customers are developing on it, sending applications to production. And I would say the era of enterprise AI is here, right here at Snowflake.
Well, let's talk about enterprise AI because you gave a number of use cases and some customers everybody knows. I'm going to pick one. People know it because it's on their dining room table. Kraft Heinz. Why does Kraft Heinz need Snowflake?
Can you repeat the question,
Why
Jim?
does Kraft Heinz need Snowflake?
Kraft Heinz is an iconic brand, but they have lots and lots of data. And so part of the magic that Snowflake brings to the table with its AI offerings is that you can analyze customer feedback data very easily using language models and figure out which questions, for example, have automated responses that you can send, which ones you should send to like an actual human. These are the kinds of applications that people are thinking and implementing with Snowflake. And the beauty is we make it real easy out of the box and super efficient to get these done.
Now, you also made an acquisition. Some people said to me, you know what, I can use Snowflake, but I have to then observe. I have to interrogate my own data. I don't know. I mean, I rent these guys. I have to bring it back. Tell me about what it will mean that you have true era AI observability now that you've bought this a new company that I think is going to make it so that you guys are. I don't know how much you need Amazon Web Services once you do that. I don't know. You tell me.
Well, one small clarification. We signed a definitive agreement to acquire them. The actual acquisition we expect to happen soon.
Fair enough.
But as people are racing to develop AI applications, things like observability becomes important because let's say you change the prompt. You still want to make sure that the application's working well, or you want.
Now, so Snowflake had a good quarter. I want to point out a couple things. I'm still going through their financials. I haven't fully gone through it. Arnie posted some decent charts yesterday talking about what's going on with Snowflake. In Q1, they bought $516 million of their stock. And the multiples they're purchasing their stock at is at 14 times sales and 140x free cash flow. And so Arnie's kind of bringing up the question, hey, does this really make sense to be buying your stock at these levels? Snowflake right now and their valuation is at 169 in the pre-markets. It's going to be up, what, 60 billion basically when the market opens. I don't know if 34% year-over-year growth is sustainable for Snowflake. I know they sandbag guidance. The question is if it's, how sustainable are they going to be? They're getting a bit closer to GAAP profitability. They still lost $316 million this quarter, but 30% growth is 30% growth. I mean, it's a hell of a quarter. It's good growth. It's the growth they need to do. The acquisition, I'm concerned how exactly that's going to help them grow, but it seems like it's another layer to their enterprise AI data space. But it's one of those things that you got to think about. Another thing that Arnie tweeted about is that Snowflake's Q1 stock-based compensation divided by revenue is 40%. Palantir's is 20%. Now, look, 20% is not incredible, but there is a difference between 20% and 40%. And a lot of that stock-based compensation is not going to engineers. It's going to salespeople. So I think it's a good quarter. I do think the stock, it's up 3%, which is, it's nice. Let's see if the street really gets into it and feels that this is a quarter in which they think they need to keep buying more of it. But it was overall a good quarter. If you bought the Snowflake dip at 145, 150, you're up, right? You can't really complain. If you bought it as a trade, you're also up. So there's not much to complain about. And I think it's overall good for the Datadogs, the Palantirs of the world, if Snowflake itself does well, because it proves that there's more market going into this AI space. And that's good for everybody in this space as well. So that's what we got in the context of Snowflake. Now, here's another thing I want to show you guys that was absolutely interesting yesterday, one could argue. Bill Ackman. So this story I thought was, I kind of think I like that Bill Ackman did this, but I also think that Bill Ackman was being a little too extra for doing this as well. So let's pull this up right here and let's talk about this. Jay Schwal says, how does it matter that a lot of the SBC is going to sales instead of engineering? From my understanding, as if you keep spending SBC on sales, they have to keep producing more sales. And if the sales team does not continue to produce this 34% multiple or 34% year-over-year growth, given Snowflake's high multiples, I feel like the SBC is kind of going to waste at that point, right? You're not using it to actually build product or innovate. You're doing that through external acquisition, which is not bad. It's just one of those things that I personally don't like to see if I'm a long-term shareholder in a company, especially given, what's going on with AI. It means that your engineers aren't actually innovating internal products, but it means that you're giving it to people who have to sell. And if they don't keep selling, or if sales can't keep up, then I think the stock-based compensation is going to people that probably aren't in the best place to get more of the stock. It's not the worst thing in the world. But if I'm long on Snowflake, I kind of want that stock-based comp going to people who are actually building products. And again, that comes from my Palantir background, but that is at least how I break down where that plays out. Okay, so here, this is what Bill Ackman said yesterday. I took an Uber today, and for the first time, I was offered an NYC yellow cab. I thought good for Uber supporting the cabbies. I asked the driver about his experience with Uber, and he surprised me by saying it was bad. And he basically goes on to say that I don't get the tip. He says that the Uber cab driver doesn't end up getting the tip from Uber. And Bill Ackman was like, there's no way that could be true. And so the rider said, hey, why don't you test it? And he added a $5 tip. The part that was hilarious about this on Twitter is like, this dude is like a multi-billionaire and he's adding a $5 tip. You probably don't need to add like a $30, $40 tip, but it's like $5, dude. Like really rich. But regardless, he sends the $5 tip, and this is what the taxi driver under Uber gets. He gets $26.51, and he doesn't get the tip. The tip isn't there. So Bill Ackman's like, I texted the CEO of Uber, because of course Bill Ackman is the CEO of Uber on speed dial. And he's like, yo, you got to fix this, right? So as soon as you see this, the initial reactions to this for the first 20 minutes that it was up was a lot of people being angry at Uber. Oh my God, how are you stealing from the taxi drivers? How are you like exploiting the workers? Yada, yada, yada. And I kind of felt that way for like 5 minutes as well. I was like, oh, that kind of sucks for Uber. They got to fix this thing. And then Uber, and then look at Elon. Even Elon was like, whoa, this is dark, right? And then Uber comes out and says, hi, Bill, we're stepping in for our CEO who's on a business trip. We pass 100% of the tip to the Curb, our taxi partner, and they are required to pass the tip to the driver, usually within a day or so. The tip isn't showing on the screen because passengers tip after the trip ends, and this screen doesn't refresh. That's why the screen says tip may be added by passenger after trip completion, and check trip history for final grand total amount. It's not as clear as it should be for taxi drivers. It's a relatively new product for us, and we'll work with our partners to improve the screen. We're excited about bringing Uber demand to taxis. We believe we are better together. So basically, Uber was like, shut your ass up. You don't know what you're talking about. Stop giving us all this bad press. Literally, if you just refresh it 5 minutes later, the tip would show up. It's not our fault. We have a third-party vendor who delivers everything to the cab drivers who are under Uber. So stop talking shit. And it was just hilarious for me to see, because the amount of bad press Bill Ackman probably gave, I mean, this tweet got what? 3 million views? It got community noted, but like, he was wrong on this, dude. It looks like he was absolutely wrong. Now, maybe the UI isn't perfect, right? And they definitely should show the tip immediately. You can make some adjustments to the product, but he was acting like Uber was stealing the tip, and like that's just not the case. So even if you're a multi-billionaire, you can kind of get things wrong, like Bill Ackman, especially when it comes to just like giving your thoughts quickly versus seeing what's actually happened. Why is Kris yapping about Palantir in the chat? Kris, didn't you say you weren't going to talk about Snowflake and Palantir anymore? You can't help it. You can't help it. Literally, Kris says, gotta break the Palantir versus Snow narrative at 9:14, and now at 9:23 you're yapping about, look at Palantir shares outstanding, Palantir dilution. Dude, either talk about Palantir versus Snowflake or don't talk about Palantir versus Snowflake. Let me see. Kris, can you call real quick? And we got 7 minutes till the market open. I'm going to call you real quick if you're free. Let's get your quick thoughts on Snowflake, dude. He can't help it. He's got to talk about Snowflake. He's got to talk about Snowflake and Palantir. I love it. I'm calling you, Kris, if you can open. Also, we'll have Jose on the market open in about 20 minutes. He'll give me his thoughts on Nvidia as well. And so we'll have him here.
Yo, what up?
Kris, what's up, man? We're here with 1,300 people. I would love your coverage for the next 5 minutes on Snowflake. What did you think of the quarter? And are you still holding the stock after this quarter?
Yeah, man, of course. Snow's going to do well. They got a great CEO. It's products focused. If you listen to the conference call, they built Arctic with very little money. I think right now we're going through a phase of commoditization of all these LLMs. I think a lot of people are purely focusing on like the biggest LLMs and everything else. But the thing is, like, you know, you kind of want to tailor these things to like use cases. I think a lot of times people kind of forget that. And so enterprises aren't just like, oh, I need the best and, you know, best like model. It's just I need things that work, and they work with cost effectiveness as well. So it's almost like if you need a car to get to work, you really need a Ferrari to get to work, you know, and pay premium gas and premium insurance, or you kind of sometimes just need, you know, a regular Toyota. And Snowflake right now is building the most efficient Toyota possible. So
what do you think of the valuation here, given the 34% year-over-year growth? Any thoughts on how that's changed or gotten better for you, or more pricey potentially?
I mean, that's what my model called for, a long tail of 35% year-over-year growth. When you compound that level of growth, it's pretty significant, the amount of like value that you can generate. So you look at something like ServiceNow consistently generates about 30-40% growth every year. So the key here is consistency, you know. So if you want Snowflake, you know, Snowflake is, in my opinion, going to be very consistent with its growth, hovering between maybe 25 and 35% every year. Their model is based on consumption. So as they develop more products, more people use it, more people consume credits, and it just keeps going on and on. So it'll be very interesting to see what new products that they have ready for launch next month when they do Snowpark.
Do you think
not Snowpark, Summit.
What are your thoughts on SBC and dilution as well for Snowflake?
I mean, they're controlling it. Their long-term target is less than 2% annually. So, you know, they're being very opportunistic when they do SBC. You know, they're issuing a lot of these things at high prices, and they're being opportunistic when it comes to the stock price being lower. So as the stock price was lower, they felt, hey, listen, we've got all this cash on the balance sheet. Let's buy up some shares and mitigate some of that dilution. So that's one of the things. A lot of companies will retain cash and say, oh, look, we're free cash flow positive. But if you look at the share count's absolutely exploding. So it doesn't really help. So you kind of want to make it so that your shares outstanding are somewhat, you know, on an even keel where you don't have that much dilution.
So I'm looking at 9,822 customers, and RPO, remaining performance obligations, is up 46%. For those that don't know what RPO is, can you explain that in a nutshell and why you think it's significant that that's continuing to grow as well?
Yeah, it stands for what's that called? RPO is
remaining performance
obligations, and so that just means that there is actual demand for the product, and it's long tail demand. So a lot of people are saying, hey, you know what, I'm going to need more compute. So a lot of people are signing for bigger deals, and like I said, it just goes to show that that the product is you know, it's heavily utilized, and that there's still more people getting on it. So it's just a nice long tail of revenue that keeps coming. So, you know, if you see, it's almost like forward demand. The more forward demand there is, the more likely it is that your sales are going to keep going higher and higher.
All right. Got it. Thank you, Kris. Appreciate it.
Yep.
Talk later. Bye. As you can see right here on this slide, this is what I mean by these guys they're a sales organization at its core, right? Snowflake knows how to sell. 3,130 employees are sales and marketing out of the 7,296. Obviously, that's different for Palantir, right? Majority of them are engineers. It's like maybe like less than 1% that are sales and marketing. And that you could argue that's a bear case for Palantir, that they aren't as efficient and they really don't understand sales and marketing like a company like Snowflake, which is why the bootcamp model is so important. And hopefully that keeps expanding and getting better and better. But Snowflake is an organization that knows how to sell. When you've hired 3,000 people just to sell, which is why there is a lot of stock-based compensation for the people that sell, you know, you're going to start selling. And so they're seeing 34% year-over-year growth right now in the context of Snowflake. We got the market open in 2 minutes. We'll have Jose on at 9:45. He's going to break down some thoughts on Nvidia earnings. He is one of the best people on YouTube to talk about Nvidia and AMD. Our podcast has been on the back burner for a while just because he's been super busy. He has a kid. I've been super busy. So I think one of the better ways for us to get content together is just for him to come on the show and for him to be a contributing guest many times. So he's going to join the show probably at least once a month, maybe once every couple weeks, and give us his thoughts on what's going on in the world of semiconductors. But he'll be here, and he's been holding Nvidia since 2018. He's been holding it for a very long time. So he'll be able to tell us what he thinks is happening with Nvidia and if he was impressed by this recent earnings. Ethereum at 3,800. We'll talk about them. It looks like that spot ETF is definitely getting approved. And so that's why the market is also excited about Ethereum. All right, folks, here we go. It looks like it is time. Currently, it is 10 seconds away. Look at Nvidia at 1,020, up almost 8%. In 5 seconds, we see how the market's going to determine what happens today. Thursday, May 23rd, 9:30 a.m. The stock market is now open. All right, it's open. Nvidia's going up. Nvidia's going up. Nvidia is not stopping, dude. Nvidia is not stopping at all. Oh my goodness, 1,022. Nvidia's not stopping. Nvidia's not stopping. Holy crap. It's still going. Wow. Look at this. Look how green it is. 1,024. The buy side is coming in. People are buying. They're saying, screw it. We're just going to buy it. They're saying, screw it. We're just going to buy it. It's going to be $120 a share now when they split, or like $102. Yeah, $102, I believe. But no, 120. Wait, what's going on with my math? Hold on. 1,023 divided by 10. Yeah, $102. $102 a share now. Wow. Absolutely incredible. Look at Nvidia go, bro. It's not stopping. It's just not, it's like, or it's at least holding this green 1,022. We'll get back to that in a second, but there you go. That's what we got in Nvidia. Robinhood 1989 up 1% on the day. TSM is up 1%, 157. AMD up 3% on this news from Nvidia. AMD getting the multiple. I personally don't really think they should be getting the multiple, but they are getting the multiple as well on Nvidia. Nvidia is a 10-for-1 deal. If you buy one, you get 10. Wow, Snowflake's giving up all of its gains. Snowflake going red. Wow. Did not expect that. I did not expect that. Snowflake is giving up almost everything. It is like 0.1% away. I think this still ends green. This looks like a weird sell-off. It looks like people just taking profits. I think it still ends green. That's weird. Snowflake giving up all of its gains. Let's go to ELF. ELF is currently up 9%. Dude, ELF was down 10% yesterday. Now it's up 10%. ELF is just one of those fantastic companies, dude. They figured it out. And Wall Street likes their go-to-market approach, I think, better than Ulta, and that's why they believe they're differentiated. Look at ELF. Wow. TJ and I will have our options podcast tomorrow in the morning, guys. We killed it this week, dude. I'm not going to lie. We killed it. We sold puts on ELF, and we sold puts on NVDL, which should be up 15% today. NVDL, yeah, it's up 14%. NVDL is a 2x long leverage NVIDIA fund. It was easier to sell puts on this, and we collected about 2,300 in premium on this for about 50 grand in collateral. And on ELF, I think we sold like 10 puts. So we had a pretty good week just on ELF and NVDL. And quite frankly, it was TJ's decision to do both of those. So it was my money that he's allocated to me, but he made the decision to do this. But he made some pretty damn good choices. So we got a lot to talk about tomorrow morning on that podcast and see what moves we made this week. The one mistake he made is he closed TSLL, which is a leverage fund on Tesla, a little too early. He closed it right before Tesla ran up. So we made like 1,500, but we could have made like 4,000 more. But then Tesla came down, so didn't matter too much. Nvidia right here, 1,020. Nvidia still not stopping. Pounds here, 21.29, up 0.5% of the day. S&P 500, 532 on the S&P. We got a Novix that's at $10. It's down 1.7% on the day. HIMS up 2% on the day. Amazon 184. SoFi's at $6.99. SoFi now under $7, holding that $7 range right there. Google 179, Meta 472, Uber 65, Pinduoduo up 3%. They had a good earnings yesterday. Greenwave. This is another meme stock up 42%. Faraday Future is up 10%. Another meme stock. BuzzFeed is down 3%. They were up 60% yesterday off of Vivek Ramaswamy acquiring a bit of a stake. CRM 284 on Salesforce. Where's Snowflake? Snowflake is now red. Wow. Snowflake's down 3%. That's incredible, dude. Why is Snowflake dumping? Now Nvidia's at 1,030. Oh my goodness, dude. Oh my goodness. Nvidia's at 1,030. If you buy one share today, you get 10 shares tomorrow. Well, on June 7th, but still. Wow, Nvidia. Wow. There's what more can you say, dude? What more can you say? Absolutely incredible. It's a hell of a thing Nvidia's doing, dude. There, and the market wants it. Remember, remember at 900, we all, including myself, are like, man, at 900, maybe we wait till 800, 700. Market's like, nope, we're not waiting. This is not stopping. Wow. Nvidia continues to run. Oh my goodness. I'm going to tweet this out right now. Nvidia 1030. All right, so you got up 8.7%. There was an expected 10% move. Nvidia just added about 180 billion in market cap. Another 1%, you're going to get another 20 billion, and then you'll get to 2.6 trillion in market cap. Ethereum 3800. We got Enphase here at 120. Let's go to crypto real quick. Let's go to Bitcoin. What do we got on Bitcoin? Coinbase is down. CleanSpark is down. That's why Robinhood's suffering as well. Yeah, Bitcoin fell from it was at 70,000 in the pre-markets. Now it's at 69,155. Okay, so we got some sellers on Bitcoin. That's hurting a lot of the crypto stocks. MicroStrategy's down, Bitfarms down, Marathon's down. All these guys are down. All right, so Bitcoin's kind of flat. Ethereum's not down. Ethereum continues to inch higher off this news that the spot ETH ETF is going to be approved. Now Nvidia up 9%, 1,035. Up 9% on the day. Where's ELF? Is ELF still crushing? We're going to put ELF in the Mag 7 as well. Let's see. ELF is, holy crap, dude. It's up 15%. Goodness gracious. Dude, ELF was 130 last month. ELF had a hell of a dip. Admit your $1 of Nvidia is going to retire you. I agree, dude. Where's Ulta? Ulta? Yeah, dude. Okay, so you know we've been talking about Ulta and ELF for the past basically month on the channel. It seems like the market decided they like ELF over Ulta. Ulta is I don't know if I want to say washed up, but it's a washed up beauty brand. ELF is the new guy in town. Their marketing is elite. They're not going anywhere. Their growth is better. The street's picking ELF. It seems like that's what's happening right now. Now, I think more women shop at Ulta, but still, ELF is there, and also ELF's more e-commerce versus brick and mortar. So I think that's also helping their sales as well. Nvidia is like a couple dollars away from being up 10%. They're up 9.3%. It looks like they're going to 10%. It looks like they're going up for 10%. It looks like it's happening, dude. Oh my goodness. It is not a minivan ride, as Jensen said, or not as Jensen, as Dan Ives told Gerber. Look at this thing run, dude. Look at this thing run. Now, why is Snowflake down 4%? What's going on here, dude? Market's dumping it. And Snowflake announced that they're doing another partnership with Nvidia. They kind of teased that yesterday. And they announced a partnership with Microsoft. So they did all the things they needed to do. Very interesting that the market's dumping it. The market's not buying it at all. I don't know, dude. I don't really have the explanation for that outside of the multiples. It's getting expensive. What's interesting about Snowflake? It's the same thing with Palantir to an extent. Palantir had a really good earnings. You could argue for the contextual nature of how Palantir should have a good earnings. Same thing with Snowflake. Both of them dumped after earnings. Both of them. Palantir fell 20%. Snowflake not falling 20% because it's already down year to date 30%. Palantir is up year to date 30%. But still, Snowflake's not gaining momentum on this earnings. Weird. I don't know. I don't really know how to explain it. I don't know what the street's thinking. All right. Nvidia's about 0.5% away from up 10%. The market's selling everything to buy Nvidia. Yeah, maybe that's it. The market's literally selling everything to buy Nvidia. Vince says, how am I watching you every day? Vince, I appreciate you. Thank you, everybody, for being here. Thank you, everyone, for joining the live stream yesterday. We had about 3,500 people on the Nvidia call. So it was super, super awesome. And I hope you guys enjoyed being there. All right. Nvidia is literally a couple dollars away from going up 10%. Like, it's really coming, dude. It's really coming at this point to 10%. It's absolutely coming to 10%. It looks like it's coming to 10%. Not that type of coming. You guys are so dirty, but it does look like it's coming to 10%. Maybe we should all be coming to our senses, and we should buy some Nvidia, quite frankly, and get this bad boy. $1,040, dude. I feel like buying this stupid shit just to get 10 shares, bro. I feel like just to buy one, get 9 free, dude. It is like, that's literally, you buy one, you get 9 free. It's that simple. That's it. That's where for Nvidia. The problem is this some short-term hype and it falls back on a red day and then we can get it back at like 1,000, but I don't know. We'll see. But that's what we got on Nvidia. Mick gaslighting the chat. I might kill it with options this week. I just need Shop to close over 60. Yeah, Shopify as well has been an incredible story over the past couple of days. It's down a little bit today, but it fell 20%. As TJ and I sold a bunch of puts on it, so if we should expire worthless on those. It was a 55 strike, and shop should be good. So I think shop's probably heading to 60 as well. It hit 60 yesterday. The technicals look nice, and it's down a lot, dude. It's a great company, and it fell a lot. If we're in a bull market, you could argue people get in and buy the stock. Look at NVDL. It's up 18%. Goodness gracious, dude. NVDL is up 18%. Oh my God. This is the 2x leverage fund Nvidia. Now they have probably 3 billion AUM inside of the fund in the ETF. It's basically an ETF. Nvidia right here up 9.28%. Target is up a little bit. Palantir 21.22. Where's Robinhood? Robinhood 19.38. Robinhood trying to hold that 19. You know, we did test 20 a couple times. Like we got to this level yesterday and then we just rebounded right back to 20. So we'll see what happens there. But again, Nvidia earnings is good for Robinhood. One could make the argument that people are selling a lot of stocks just to get into Nvidia, dude. People are like allocating and concentrating into Nvidia. Now that tends to be the time where you shouldn't be buying Nvidia. You should be taking profits, quite frankly. But maybe that's not the case this time. Dell is up 8%. Now the reason Dell is up 8% is because Nvidia hinted that there's going to be a lot of network of suppliers that help them fulfill the demand for the new chips they're building. Dell, who would have thought Dell, which is up, I think, 100% year to date or something like that? Who would have thought these guys would be the beneficiaries? Yeah, Dell's up 114% year to date. Dell's doing amazing. And then you got SMCI, yeah, up 10% as well. Nvidia's carrying SMH. I don't even want to look at SMH. Last time I looked at SMH, it was 223. SMH's at 243. Wow. This is the semis ETF. This is the semis. I actually told my uncle about this yesterday because he's in India. He was asking me about US ETFs. And I told him about this. He put $1,000 in there yesterday. So he's probably already up nicely on this. He put it in a couple hours before Nvidia earnings. But SMH, for anyone who wants to get exposure to the broader equity markets for semis, but don't want to pick an individual semi, that's the stock that's the ETF you want to look at. Okay, let's pull this up. Let's pull this up right here. I want to show you guys this. Okay, so this is something interesting I want to show you guys. This is the year-to-date performance for the S&P 500. This is the year-to-date performance for S&P 500. So this is what we got. This is what we got for the S&P 500 year to date. And I want to take a look at this real quick, just because today is a day where S&P is at all-time highs, Nvidia crushed. So kind of nice to see, how the market is ultimately thinking of, or how the market has performed throughout the past year. I've averaged into the semi ETF for 2 years, up 204%. Amazing, Duncan. That's incredible. That was, one could argue a better pick than the S&P 500. So you got Google up 26%, Meta's up 32%, Apple's flat, Microsoft's up 15%, Nvidia up 91%. This is I don't think this is updated for today, so it's up even more. Yeah, it says Nvidia 949. Nvidia's up over 100%. Amazon's 20%. The biggest losers are Tesla down 27%, Boeing down 28%. And then, those are the biggest losers. Outside of that, there's not that many red stocks here, relatively. And then Intel's down 37%. But outside of those three, we've got a green market. Energy's up. ExxonMobil's up 15%. Again, tech is up really well. The banks have done great. JP Morgan fell over the past couple of days because, what's his name? Jamie Dimon's just being bearish about everything, and he says he's going to retire. But they're still up 16%. Berkshire Hathaway's up 16%. And then you got Nvidia and the semis leading the pack, up the most this year, being up 91%. So it's been a hell of a year so far for the S&P 500. If we look at the entire world and how the world has been doing, the world has been pretty green as well, right? Japan has had a great year. China, not a great year, but China at least starting to go up, given that China started to ease some of the restrictions. Latin America, not really the best year. Brazil has had a little bit of a tougher year. Canada, it's been okay. Shopify, TD, those have done not the best this year so far. Ireland's done well. United Kingdom's done well. And then India has done well. Some parts of India, not the best, but other parts of India have done good. And then Taiwan with TSM has also done well. So it's been a relatively good year for the broader markets. And now the question is, can we maintain it going into the back half of the year, the next 6 months? NVDL up 18%, Nvidia up 9%, Ethereum 38%, Palantir now is in the red, Robinhood 1956, S&P 531, QQQ at 459. The interesting thing about what we're seeing in the markets is that it took us so little time to get to the return that we're getting. I think the biggest fear now for people is, okay, can we keep it, right? Because if we can't keep it and you don't take profits, it's like we never had the gains. And so I think the market's wondering right now, can Nvidia produce a monster quarter 2 more times? And can the market withstand the inflation concerns for a little longer, or is this headed to a bad situation? And so I think that's what we're going to see in the next couple of weeks as Nvidia continues to perform, or next couple of months, and how the markets choose to interpret that. Okay, we have a guest that's joining the channel, good friend of mine. He is someone who has held Nvidia for a very long time, and he's going to be with us for the next 50 minutes to break down this earnings. Ladies and gentlemen, we got Jose.
Good morning. Good morning. How's it going, man?
What's up, Jose? How are you, bro? Have you had your coffee this morning?
No, not yet. Not yet. Had to do and run some stuff for the little one. But after this, after that Nvidia earnings, I don't think I need coffee today. I'm running off Nvidia fumes right now.
What time do you usually wake up in the morning?
It depends when the baby wakes up. Wait, it could be as early as 6 o'clock or as late as like 8:30.
I love it. Well, he's lucky enough to have a dad who's smart enough to have invested in Nvidia in 2018. Thank you at 1,400 people for being here. I'm putting Jose's YouTube right now in the chat and in the description. He is one of the best content creators on YouTube about Nvidia, and he's been covering it for about 5-6 years now. So definitely check him out if you want Nvidia and semiconductor coverage. All right, Jose, this was one of the best quarters I think we've ever seen for Nvidia. You've been holding the stock for a long time. What were your raw thoughts and anything that you thought that was concerning to you about the quarter that people aren't looking at?
In forms of concerning, I don't think there was anything that really caught my attention. Maybe just the Chinese revenue. We already knew that this quarter was going to be weak. We already knew that the company was gonna release some Chinese chips. They kind of announced the H20 silent launch to some extent, but they mentioned during the earnings call that it's still, because of all the restrictions, it's very heavy competition in China right now. The other thing we are seeing in China is the Chinese government's giving a lot of subsidies for companies to build their own AI chips. And if they're purchasing AI chips, they're giving subsidies for them to buy chips that are made in China. So not really a concern to me, because we did hear from Jensen during the earnings call that supply is not going to be able to keep up with demand onto next year as well. So this is telling me that at least until next year, we really don't need that Chinese market right now. And who knows? Right now, ChatGPT came out of nowhere. What can come out next is going to drive the next wave of demand in the upcoming years. We're already seeing that multimodality being implemented into models and that complexity. Not much of a concern, but something to keep an eye out. In the overall quarter, I was just super excited. We beat revenue heavily, guidance 28 billion. I think it most beat even the top end of what analysts were expecting. And I was expecting them closer, a little bit lower, so they even beat my expectations. The other thing that I really was excited is they did mention that Blackwell revenue is going to be a lot this year. I was expecting Blackwell revenue to really be a lot next year, to maybe be minimal this year. But for that, I'm super bullish for the Blackwell architecture, especially their Grace Blackwell super chip, which I think is going to dominate the market.
Yeah, I think this was really exciting. We got Nvidia right here at 1,035. The stock performance is just incredible, up about $170 billion in market cap today. Jensen Huang did say that Blackwell, we're just getting started on that, and the revenue is going to come through, and we have a chip that's ready after Blackwell. So do you think that he really, like this move in the stock we're seeing, do you think it's because investors felt very calm after the call? Because Jensen basically told them, yes, it's a cyclical business, but the cycle has probably a couple of years left before this thing really slows down.
I think the market got too excited about two things that Jensen mentioned. The first thing is many investors or even analysts were projecting a pocket of weakness this quarter and next quarter, as maybe some big tech companies were not going to buy the H100 or the H200 as they waited for the Blackwell, which makes sense. Hey, kind of in a top level overview, makes sense. Why buy the chip right now when in 2-3 quarters a way better chip is going to come out? But Jensen mentioned that no, look, our demand for Hopper is higher than ever. So that kind of eliminated that bearish thesis that we might see some pocket of weakness while Blackwell came out. And I think the second thing is just Jensen reiterated to the market that, hey, look, we're going to be supply constrained for the next year or so. So at the end of the day, we can continue to see a nice revenue increase, and we get visibility that there's still very high demand for Nvidia's chips, at least for the next, I want to say, year and a half, at least, based on what Jensen once mentioned. So it did crave. It did calm a lot of the bearish thesis, in my opinion, that were floating around there.
Yeah, I think that's a good point, and I think that explanation of where the future of AI is going is what got analysts. They've heard the story a billion times, but Jensen saying it and putting a little bit more tangible guidelines on product announcements, I think made them a bit more excited about what's happening. Profitability, 15 billion in the quarter. That's up 500% year over year. Do you think those numbers are sustainable, or you think they're building off a small base, which is why they're able to put up those numbers? Like revenues up 400 or 262% year over year. Do you think that continues?
Oh, no. From here on now, I think quarter over quarter was only like it's still insane. Only like a 22% year quarter over quarter sequential growth. I think on a sequential basis, we're gonna keep growing around maybe the low teens, mid-teens to low 20s for a bit. I don't think that year-over-year growth is sustainable. Next year, we're not, especially after this crazy year that we have this year. I don't think we're going to see triple-digit revenue growth for next year.
Right.
But on a sequential basis and on a year-over-year basis, we're still going to see growth overall.
Okay, so does the market have it wrong today, Jose? Are they giving them too much too quick on this 8%? You got to give me an answer here. Is this you've been in the stock for, first of all, are you selling any shares today?
I'm not selling anything today.
Why not? Why don't you take some profits? What's wrong with you?
I think for me, like I mentioned, Nvidia is one of those long-term positions where in 5-10 years from now, I'm going to be like, hey, why was I a dummy and sold a little bit in 2024? Why didn't it hold? So for me, like I've mentioned before, everybody has a different financial life. For me, my financial life, my money in my stock account is money I don't touch anytime soon. I really don't need that money at all. So it's not like I withdraw from it. Since it's not a bank for me, I don't mind riding the waves. If we do see a dip, I think any dip here should be bought. It'd be, especially if we go like below 800, and it's not impossible. I mean, we've seen crazy dollar swings on Nvidia. I think anything below 800, 850 to me is a nice buying opportunity. Long term, I'm still super bullish in this stock that I have no intentions of selling. I'm going to be more curious though on CapEx, right? CapEx is going to be the most important thing. But another thing that we did here during the earnings call is Tesla, a huge 35,000 GPU cluster. It's one of the largest I've heard about. We know Meta has 22,000 ones. And they also mentioned that they had some that are building that are 100,000 GPU clusters. I personally never heard of any 100,000 GPU clusters, but they're mentioning that they have some in production, and one of them is even using their networking solutions. So their networking market is growing dramatically. So there's a lot of tailwinds for Nvidia right now.
Do you think the street has it wrong giving them 8% this quickly?
Based on the earnings, I don't know. Price is volatility. It is volatile like always. I think in the long term, no. In the short term, yes.
What do you think about the stock split? As a shareholder, now your million shares for you, Jose, are going to turn into 10 million shares.
10 million for sure.
So, does that make you feel a little bit better just about having more shares?
I think maybe now I'm going to start looking at using that amount of shares to build up maybe some form of income via options. I still haven't decided yet, but it's just going to open up a lot more optionality on options for me.
Oh, I like that. I like the optionality. This is what you go, baby.
So that's the only thing. For obviously you get a lot more workers are able to now buy shares as well. They wouldn't be able to buy shares too much with the high price. You also are going to have international shareholders that can now buy, because most international places still don't have fractional investing. So I enjoy the stock split, but it doesn't really change my thesis one way or another.
Yeah, guys, I was kidding on the 1 million shares. I don't actually know if maybe he might. Dude.
I wish I wouldn't be here. I would just be on.
You guys actually believe me? Yeah, I was kidding, but he has a lot. I don't know if it's 1 million, but he has a lot. Okay, last thing for you, Jose. Thank you guys for joining. And again, his YouTube is in the description, folks. AMD and the other semis, do they deserve to get some green because of Nvidia, or should this be an Nvidia story and the rest of these guys should fight for their green?
They could get a little bit of the green because, Nvidia mentions that they are supply constrained. So if you do have an AI accelerator, the chances of you selling some of your AI chips has increased because the demand is still higher. So just because the overall market is still growing, there's not enough supply for the overall market. It increases the probability that those other companies are going to be able to sell their AI chips. So maybe not I don't know how much AMD and some of these other AI companies are up, but I definitely do believe they deserve some of the green.
All right, there we go. Jose, thank you for joining the channel, man. It really means the world to me, and we'll have Jose on probably every month, at least one time on the channel to give his thoughts on what's going on in the world of semis. I know you're going to be happy just throughout the day because your portfolio is looking nice, and you're going to you're going to get a little extra of a barbecue sauce at Wendy's because now they're charging you extra for the barbecue sauce.
I'll get the large this time.
The large this time. Thank you, Jose. Means the world. See you later. All right, so we got the market taking a little bit of a dump, folks. 1,028 on Nvidia. They're still up 8%, but Bitcoin has crapped the bed. Robinhood struggling to maintain $19. S&P trying to get to 530, and Bitcoin right here is below, wow, 67. That's a big drop, dude. We were at 71 2 days ago. It's a big drop. That's messing up Robinhood, Coinbase, all these guys. The ETF inflows, let me check. I didn't check them yesterday. How bad were they? Were they good or bad? So let's see. The ETF inflows, 154 million net. 154 million net. So still good ETF inflows. Not like that's bad. I don't know. Palantir's crashing as well. Where's Palantir? Palantir, how bad is that? Palantir, wow, $20.81. Dude, I've been buying a lot of Palantir this week, dude. I bought like almost 270 shares this week at like 21.10, 21.20. I'll buy some more at 2080. Let's see if it gets even lower, dude. I'd love to buy it at $20.50. I think below 20 is when you back up the truck. I just am skeptical that we get below 20. It's very interesting though. Even Snowflake taking a dump today. It's like Snowflake walked into a earnings environment they couldn't beat. I mean, they beat on earnings, but they couldn't win because the market is sending everything down. Snowflake's down 5% on a good earnings. The only things that are up are Dell, SMCI, SMH, AMD, and Nvidia. And NVDL. ELF is up. ELF is just in a totally different league. QQQ is up a little bit. Taiwan Semi's up. It's all a Semi's name. Everything else, Datadog is up, but it's kind of flat. PayPal is basically flat. HIMS is up a little bit. SoFi below $7, $6.97 for SoFi. Goodness gracious, dude. Amit, would you buy under 21? Yes. I'm probably not going to buy today, but I absolutely would buy under 21. 22 and below to me has been a very easy psychological buy zone for me. Everyone has their own different zone, but for me, I don't think we go below 20. I think above 22, 23 gets not necessarily pricey, but it gets like really like fully fair value. So I think below 22 has been a buy zone for me. Yeah, so if it continues to drop below 20 in the low 20s, I will buy. SMCI is up 4%. Yeah, look at this. Verizon's down, AT&T is down, Duolingo's down, TFC is down, IBM's down, the banks are down. Everything's down, dude. Like MicroStrategy's down. Literally everything's red. Fortinet, cybersecurity's down. Zoom is down. Netflix is down. Costco's down. Macy's down. Eli Lilly's up a little bit, but it's flat. DJT, of course. Donald Trump's SPAC is up somehow. Rivian's down. But the semis are up. Those are the only thing green that I see. I honestly do this thesis that people are selling their stocks to get into Nvidia. It doesn't sound that crazy today. It really doesn't sound that crazy. That is wild though. Greenwave's up as well. That is wild, right? Greenwave's up 40%. And then where's Tesla? Tesla's probably down. Tesla's down. Tesla's right back to where Warren Redlick sold it at, around 178. It went to 188. Everyone made fun of him because he sold the bottom. Well, look at it now. It's at 177. Is the market dropping due to FOMC minutes? That's not a horrible hypothesis. The FOMC minutes were yesterday and they weren't the best. But the market didn't care because Nvidia was like 2 seconds after, right? Maybe that's finally coming into the markets. Oil is up a little bit as well. Oil's up about 0.5% today. So oil's up a bit. The 10-year, where's the 10-year? We'll get money market data later at the market close today. 10 years up slightly today. 10 years not up dramatically. 10-year about 4.469, nothing crazy. I don't know, dude. I feel like people are dumping to buy Nvidia. So I asked myself a question yesterday. Do I want to buy 1 share of Nvidia or do I want to buy 50 shares of Palantir? And I came to the conclusion, dude, at the end of the day, I'd rather have 50 shares of Palantir. Like the way I'm starting to develop an investing philosophy is, do I have a couple $1,000s in my brokerage of buying power where I could, buy 3-4 shares of Nvidia and then that turns into 40 shares? Yeah, I could. But if Nvidia is not going to become like a real big position, we're talking about, $25,000 to $50,000 just to start with. I don't know if I want to get into it. And that's the same for any stock. I think when I was like younger, it felt cool to have like 5,000 here, 4,000 here, 6,000 here. But now I like to be concentrated, dude. I really like to be concentrated. And I feel like I'd rather have 50 more shares of Palantir than 10 shares of Nvidia at 2.53 trillion, even though you can still argue Nvidia's cheap. I'm not denying that, versus Palantir at 46 billion. You know what I mean? I just feel like the risk reward and for how long I want to hold it is longer. Like I think Nvidia, 5 trillion probably happens over the next 5-6 years, and that's a great return. I just think for Palantir, the return is potentially better than that. Which means I think it's better than a double, essentially, right? Nvidia doubles, you get to 5 trillion. I think Palantir, there's a bit of a 3-4x there versus just the doubling. Maybe I'm wrong on that. I could very well be wrong. But and let me know what you guys think in the chat. Would you rather buy one share of Nvidia if you don't have a ton of Nvidia content? Or not Nvidia content, Nvidia, look at me as a content creator. Nvidia stock? Or would you buy more shares in a company that you're already heavy in and add to the position on the dip? What would you do there? How would you think of it there? What would you rather do? I think everything is selling because of geopolitics. PMI came out. Oh, what's the PMI? Hold on. What's the PMI data? Oh, this is the reason. Thank you, June. This is the reason. Okay, so now we know. But yeah, put in the chat. Would you buy one share of Nvidia or would you buy 50 shares or 30 shares of another stock that you already have a heavy position in? I'm curious what people think. Okay, so PMI. US PMI surged to 54.4, up from 51.3. Okay, so that's why we're down. So for those that don't know what PMI is, it's basically a manufacturing survey data of how strong growth is in the economy in regards to output of manufacturing. And then there's services PMI. There's a lot of different variations to it. If we're above 50, we're expanding. If you're below 50, you're contracting. April was 51.3, which was actually lower than expected. That was good for inflation. The market thought we would get 51.1. We ended up getting 54.4. Why is the market down? Because you may be saying, hey, we're above 50. We're expanding. The economy is doing great. The problem is if the economy is doing great, there's going to be more pressure on getting inflation to come down. And this is the existential battle we've been dealing with for the past basically 18 months. If the economy does well, so PMI above 50, then inflation is going to be harder to come down. That's why the market's tanking right now. S&P is green, but individual equities are tanking. That's annoying, dude. That's like, because this is actually really good momentum. I don't know if the market's going to care this much about PMI in the next couple of days, but at least today, the problem is it's not even about the next couple of days, dude. If I believe inflation's coming down, we just don't want to see data points that make it harder for inflation to come down, because then that rate cut is just going to be more difficult to get. And shelter's really got to carry the ball here in terms of getting CPI to come in lower. But yeah, PMI going up just means that there's more money in the economy. People are spending more. And we're seeing that with the jobs data. The jobs data came in hotter than expected as well today. Now, again, I don't think PMI is the overall thing we need to care about, but it is one thing that will get the markets upset if they don't see progress on that to the downside. Palantir, $20.69 now on the day. Home sales dumped. Yeah, yesterday home sales dumped as well. But what do you expect, right? You got fucking mortgage rates at 7.5%. Of course, home sales are going to. The Fed has to accelerate the housing market by lowering rates, but they're not going to do that until inflation comes down. And until inflation comes down, people aren't going to buy houses. So it's a really tough situation they're in. Jose's YouTube, for those that are asking, I'm putting in the chat right now. It's right there. You can check it out. You can check it out right there. Amit, tell us again how nice a soft landing is going to be. Look, a soft landing is still on the table because shelter should be coming down and we should be getting CPI closer to 2.7, I think, by September. It's at 3.4 right now. But, and also, dude, I mean, look, at the end of the day, it's an election year. We're going to get a rate cut at some point. We didn't even talk about the crypto bill. I'm surprised Bitcoin is down, dude. A big crypto bill, the FIT bill, which basically, even though all the details of it aren't clear, it creates a regulatory framework for how the government should deal with thinking of securities, unregistered securities, et cetera, like Bitcoin and Ethereum. It passed the House yesterday with 273 versus 119 votes. Now it goes to the Senate. I'm sure it's going to pass the Senate because the Democrats know they need to get elected and they can't be bearish on crypto. And that also means Robinhood and that Wells notice the SEC gave, that's going to be bullshit, dude. Because Robinhood's literally going to go to the SEC and be like, the US government says that crypto is okay. You guys have to get off of our dick. That's basically what they're going to tell them. And so the Wells notice is not a concern anymore for Robinhood, in my opinion. But Bitcoin, you would think it goes up today on that news. And nope, it continues to head head to some troubles. It keeps getting rejected at 70K for literally 4 months now, or not 4 months, about 3 months. We've been getting rejected at 70K. Last time we got to 73 was in March, and since then, haven't been able to get over that level. Robinhood 1951, Taiwan Semi 157, and then we got Nvidia still holding 1,030 here on the day. As Kris says, home sales down, inventory up, price pressure. It's tough. It makes it tough for inflation to come down and for people to end up buying a house. And look, who wants to sell a house if they know they have to buy another house at a 7% mortgage, right? Unless, like, the Goldilocks scenario is if you've been holding on to a house for a while and then you can sell it and then you're going to rent, right? But like my parents, our house is doubled in value. We're not going to sell this house and then go rent an apartment. Like, that's just not going to happen. So why we would never sell. So we wouldn't take advantage of it. And so it's like, unless you are ready to sell and then go like downgrade your lifestyle to like, or at least for a little bit of time, right, to take advantage of cashing in on a property, you probably still need your house. And a lot of people, like my parents, do, so they're not going to sell. And that also puts more pressure on the inventory supply. Okay, what did people say? More people said they would buy a company they already have more shares of versus Nvidia. It seems like that's what the majority of the chat is saying. So you guys would buy, for example, more shares of Palantir or more shares of, I don't know, Shopify, more shares of Elf if you already have a position, Elf up 15% versus establishing a position at all-time highs on Nvidia. I mean, it is a hell of a thing to do, right? To establish a position at all-time highs for Nvidia, even though it'll turn into 10 shares. To go like, all right, now that Nvidia is at the highest valuation it's ever been, still relatively cheap given the growth, but I'm going to buy now. It is saying something, you know, it's definitely saying something versus locking in on your deeper convictions, which is why you have a deeper position on some of those stocks and just doubling down on those. I just think I would rather double down on things I'm already in versus getting into Nvidia. And I think that's a sign of maturity as well, dude. Now, I could be wrong. Nvidia could go to 1,500 by the end of the year. I don't know. But I feel like it's a sign of maturity as an investor to be like, all right, look, I missed the Nvidia story. I've had, 10, 15 years to get into it. For whatever reason, I didn't get into it. And so that's okay. I double down on the thing that I did get into, and I hope that works out. But I don't chase something at all-time highs, It's just not really, I don't know if it's the best way to establish a discipline in a portfolio either. Rent is expensive. Trying to find an equivalent property to rent what you're selling to will kill your ROI. Yeah, that's fair. Rent is also expensive as well. That is an absolutely fair point. Oh, Christian, thank you for this. I saw this last night. I forgot to mention this. So China announced a military maneuver at the Taiwan border. This did happen last night, but it went under the radar because Nvidia was like taking up the news. This is happening. This is like a thing that's going on. And it's so annoying because these damn CCP officials don't understand their economy is literally underwater. And the only way for them to like not be underwater is for the world to want to engage with them. I don't understand why they're trying to shoot themselves in the foot and do this, because it's like, wait a second, if you do that, like people are not going to engage with you from an economic perspective. I'm just so confused. Now, that's why I just feel like it's a little bit of like signaling. It's not really like they're actually about to invade. They're like just like messing around there because they know if they invade, dude, their economy goes down the drain. Their economy is already down the drain. And also, I wonder if the Chinese people have a bit of a revolution against the government. Now, the odds of that are slim, but if they don't have jobs, if most of their net worth is wiped out in real estate that's empty, you can't buy crypto there, and now you're invading Taiwan. I mean, I don't know if the Chinese people are going to fall for the propaganda that we need to unite with Taiwan again. I don't know, dude. But again, that's another reason for why Palantir has been saying, hey, the world isn't as nice as it seems anymore. But it would definitely hurt China's economy. Alibaba's going to absolutely shit the bed. Probably that's why Alibaba, is down 2% today, because you don't want China invading Taiwan. Now, granted, maybe China thinks our economy is so bad the only thing we can do is invade Taiwan to make the economy better again and to unite the people for this nationalist identity and dream, which is absolute bullshit. But if that happens, that would not be the best. Dominic says, when I'm buying stocks, I look for a 5 to 10x within 5-10 years. That's also a good question. When you buy a stock, because I'm sure there's a variety of opinions here in the chat, what are you looking for? Like, what are you actually looking for? Are you looking for a 5x within 10 years? Are you looking for a healthy beat in that individual equity over the S&P 500? So you're looking for at least 9% CAGR in growth a year? Are you looking for a dividend plus capital appreciation? What are you actually looking for when you buy an equity? That is an interesting question, because I think that also determines if you should buy Nvidia, right? Stacy says, should I buy before or after the split? Again, my question here for anyone who wants to buy Nvidia is like, do you want to make this a real position? You know? And if a real position is 10,000 for you, then okay, do you want to put 10 grand in it? If a real position is 50 grand or 100 grand or 200 grand, are you ready to make that a real position at all-time highs? Or are you ready to buy and just DCA as it goes down, because now you're so comfortable with earnings, there's no fear that Nvidia is going to do bad, and any dip ends up getting bought. Therefore, just buy it and DCA all the way down because you can't time the top. Maybe because it's an interesting question, dude. I as much as I want to buy it just for the hell of it, I'm also just like, well, I'm not going to build this position to be super heavy. At least I don't think I am right now. So what exactly is the point of buying it? Just to show I have 10 shares of Nvidia? Like that's just childish, right? That's not actually building a portfolio strategy, in my opinion. Or buy SMCI instead of Nvidia as Nvidia proxy. No, I don't agree with that, dude. I love SMCI, and I think they're definitely an Nvidia proxy, but I don't think SMCI is anywhere near Nvidia. And I think SMCI could have weakness before Nvidia shows weakness. And if anything, I would rather buy the dip on Nvidia if I buy too early versus buy the dip on SMCI, dude. Like, we're talking about a company you can sleep well at night, it would be Nvidia versus SMCI. But it is definitely a proxy as well. I thought you were already up 40%. Yeah, let me see how much I'm up on my Nvidia, dude. Because I bought the dip while you guys were afraid at 700. Everything's red in my portfolio except for Nvidia. Nvidia, I am up. Yeah, dude, I'm up 33%. It's really hard to get these types of gains, dude. You really have to take advantage of opportunities when they're presented to you. And if you do that, maybe you can be up 33%. But that's what we got. Okay, so we're going to do two things. We're going to watch the video I posted yesterday about this new bike. I want to show you guys that because I got this new bike and I'm about to ride it after the market open. And dude, I rode a bike yesterday for the first time in like 5 years, bro. I haven't had a bike I rode a bike in the past 5 years, but I mean like my own bike. Like literally after earnings, I was just like, you know what? I want a bike. I don't know what inspired me to get a bike. So I went to Walmart and I got a bike. And now I have a bike and my legs, dude, I rode it for like 30 minutes yesterday. My legs were killed. But I think this will incentivize me to work on my legs a lot more because, well, you'll see in this video what I have to say. And then we'll watch Jensen on Yahoo Finance. He did a 12-minute interview yesterday. We'll end off with watching what he had to say. All right, here we go. All right, guys. So today Nvidia just had earnings. Absolutely incredible. Right there, if you can see, we got a full moon. It's not the best in the video, but it's a beautiful full moon we're seeing right here. It was a beautiful moon, dude. I don't know if anyone's on the Northeast. It was just such a beautiful moon last night in New Jersey. Right there, that's where it is. And in honor of Nvidia earnings, I decided that, I need to get my legs in shape. So we got a new bike too. I did invest $1 during the 770 dip 3 weeks ago. So I'm up 30%. Thought I should treat myself. But anyway, we got this bike, the moon right there. Incredible. Now it's time to get these legs in shape because, not only do I invest in defense contractors, I have my own guns. You know what I'm talking about? So now we got to get the legs in shape. So yeah, here we go. This is what we're going to do. Everyone's saying, why do you have the headphones over the helmet? Dude, the helmet, as you can see, I can't have the headphones inside the helmet because they're Beats headphones. So I just put them over the helmet and they worked pretty damn good, dude. They did what they had to do. So I'm constantly innovating, dude. I'm constantly innovating. That's what we got. All right, here's Jensen. We'll end off the market open listening to Jensen for the next 12 minutes on Yahoo Finance. If you haven't seen this, he talks about the blowout quarter and why the company is well positioned for the next decade. Here we go.
Jensen, welcome. Thank you so much for being with us.
I'm happy to be here. Nice to see you guys.
You too. I want to start with Blackwell, which is your next generation chip. It's shipping this year, you said on the call. You also said on the call, we will see a lot of Blackwell revenue this year. So if we're looking at about $28 billion in revenue in the current quarter, and Blackwell is a more expensive product than Hopper, the chip series out now, what does that imply about revenue in the fourth quarter and for the full year?
Well, it should be significant. Yeah, Blackwell, and as you know, we guide one quarter at a time. And but what I could tell you about Blackwell is this. This is a giant leap in AI, and it was designed for trillion parameter AI models. And this is, as you know, we're already at 2 trillion parameters. Model sizes are growing, about doubling every 6 months. And the amount of processing between the size of the model, the amount of data is growing 4 times. And so the ability for these data centers to keep up with these large models really depends on the technology that we bring to them. And so the Blackwell is designed also for incredibly fast inferencing. And inference used to be about recognition of things, but now inferencing, as you know, is about generation of information, generative AI. And so whenever you're talking to ChatGPT and it's generating information for you, or drawing a picture for you, or recognizing something and then drawing something for you, that generation is a brand new inferencing technology, is really, really complicated and requires a lot of performance. And so Blackwell is designed for large models, for generative AI, and we designed it to fit into any data center. And so it's air-cooled, liquid-cooled, x86, or this new revolutionary processor we designed called Grace Blackwell Superchip. And then supports InfiniBand data centers like we used to, but we also now support a brand new type of data center, Ethernet. We're going to bring AI to Ethernet data centers. So the number of ways that you could deploy Blackwell is way, way higher than Hopper generation. So I'm excited about that.
I want to talk about the inferencing, Jensen. Some analysts have brought up the idea that as we move over towards inferencing from the training, that there may be some in-house companies, processors from companies, those made from Microsoft, Google, Amazon, may be more suited for the actual inferencing. I guess, how does that impact NVIDIA then?
Well, inferencing used to be easy. When people started talking about inference, generative AI didn't exist. And now generative AI is of course, is about prediction, but it's about prediction of the next token, or prediction of the next pixel, or prediction of the next frame. And all of that is complicated. And generative AI is also used for understanding in order to generate the content properly, you have to understand the context and what is called memory. And so now the memory size is incredibly large, and you have to have context memory. You have to be able to generate the next token really, really fast. It takes a whole lot of tokens to make an image, takes a ton of tokens to make a video, and takes a lot of tokens to be able to reason about a particular task so that it can make a plan. And so the generative AI era really made inference 1,000,000 times more complicated. And as you know, the number of chips that were intended for inference kind of fell by the wayside, and now people are talking about building new chips. The versatility of NVIDIA's architecture makes it possible for people to continue to innovate and create these amazing new AIs. And then now Blackwell's coming.
So in other words, you think you still have a competitive advantage even as the market sort of shifts to inferencing?
We have a great position in inference because inference is just a really complicated problem. And the software stack is complicated. The type of models that people use is complicated. There's so many different types. It's just going to be a giant market opportunity for us. The vast majority of the world's inferencing today, as people are experiencing in their data centers and on the web, vast majority of the inferencing today is done on NVIDIA. And so I expect that to continue.
You said on the call a couple of times that you'll be supply constrained for both Hopper and then Blackwell chips well until next year because of the vast demand that's out there. What can you do about that? Are there any sort of levers you can pull to help increase supply?
Hopper demand grew throughout this quarter after we announced Blackwell. And so that kind of tells you how much demand there is out there. People want to deploy these data centers right now. They want to put our GPUs to work right now and start making money and start saving money. And so that demand is just so strong. It's really important to take a step back and realize that what we build is not a GPU chip. We call it Blackwell and we call it GPU, but we're really building AI factories. These AI factories have CPUs and GPUs and really complicated memory. The systems are really complicated. It's connected by NVLink. There's an NVLink switch. There's InfiniBand switches, InfiniBand NICs. And then now we have Ethernet switches and Ethernet NICs, and all of this connected together with this incredibly complicated spine called NVLink. And then the amount of software that it takes to build all this and run all this is incredible. And so these AI factories are essentially what we build. We build it as a holistic unit, as a holistic architecture and platform, but then we disaggregate it so that our partners could take it and put it into data centers of any kind. And every single cloud has slightly different architectures and different stacks, and our stacks and our architecture can now deeply integrate into theirs, but everybody's a little different. So we build it as an AI factory. We then disaggregate it so that everybody can have AI factories. This is just an incredible thing, and we do this at very high volume. It's just very, very hard to do. And so every component, every part of our data center is the most complex computer the world's ever made, and so it's sensible that almost everything is constrained.
Jensen, I want to ask about the cloud providers versus the other industries that you said are getting into the generative AI game or getting NVIDIA chips. You had mentioned that in comments in the actual release, and then we heard from CFO Kris that 40%, mid 40% of data center revenue comes from those cloud providers. As we start to see these other industries open up, what does that mean for NVIDIA? Will the cloud providers kind of shrink, I guess, their share, and then will these other industries pick up where those cloud providers were?
I expect them both to grow. A couple of different areas, of course. The consumer internet service providers. This last quarter, of course, big stories from Meta, the incredible scale that Mark is investing in. Llama 2 was a breakthrough. Llama 3 was even more amazing. They're creating models that are activating large language model and generative AI work all over the world. And so the work that Meta is doing is really, really important. You also saw Elon talking about the incredible infrastructure that he's building. And one of the things that's really revolutionary about the version 12 of Tesla's full self-driving is that it's an end-to-end generative model, and it learns from watching videos, surround video, and it learns about how to drive end-to-end and using generative AI. Predict the path and the how to steer the how to understand and how to steer the car. And so the technology is really revolutionary, and the work that they're doing is incredible. So I'll give you two examples. A startup company that we work with called Recursion has built up a supercomputer for generating molecules, understanding proteins and generating molecules for drug discovery. The list goes on. I mean, we can go on all afternoon, and just so many different areas of people who are now recognizing that we now have software and AI model that can understand and learn almost any language. The language of English, of course, but the language of images and video and chemicals and protein and even physics, and to be able to generate almost anything. And so it's basically like machine translation. And that capability is now being deployed at scale in so many different industries.
Jensen, just one more quick last question. I'm glad you talked about the auto business and what you're seeing there. You mentioned that automotive is now the largest enterprise vertical within data center. You talked about the Tesla business, but what is that all about? Is it self-driving among other automakers too? Are there other functions that automakers are using within data center? Help us understand that a little bit better.
Well, Tesla is far ahead in self-driving cars. But every single car someday will have to have autonomous capability. It's safer, it's more convenient, it's more fun to drive. And in order to do that, it is now very well known, very well understood, that learning from video directly is the most effective way to train these models. We used to train based on images that are labeled. We would say, this is a car, this is a car, this is a sign, this is a road, and we would label that manually. It's incredible. And now we just put video right into the car and let the car figure it out by itself. And this technology is very similar to the technology of large language models, but it requires just an enormous training facility. And the reason for that is because the data rate of video, the amount of data of video is so high. Well, the same approach that's used for learning physics, the physical world, from videos, that is used for self-driving cars, is essentially the same AI technology used for grounding large language models to understand the world of physics. So technologies that are like Sora, which is just incredible, and other technologies, VO from Google, incredible. The ability to generate video that makes sense, that are conditioned by human prompt, that needs to learn from video. And so the next generation of AIs need to be grounded in physical AI, needs to understand the physical world. And the best way to teach these AIs how the physical world behaves is through video, just watching tons and tons and tons of video. And so the combination of this multimodality training capability is going to really require a lot of computing demand in the years to come.
Jensen, as always, super cool stuff and great.
All right, folks, there you go. There's Jensen basically saying we're not going anywhere. Demand is keeping up, and Nvidia is going to capitalize on that demand. Let's do word of the day, and then I'll get you guys out of here. I'll be back for the market close at 3:45. Also, I'll be interviewing Matt Hogan, the CIO of the Bitwise Bitcoin ETF, at 6 p.m. Eastern, 3 p.m. Pacific. So after the market close, about an hour later, we'll have Matt Hogan on the channel, and we'll talk to him as well. Word of the day, Spondylix? Spondylix. Cash. Huh. Interesting. I've never heard of this word. Spondylix. Spondylix is a word for cash. The young entrepreneur was determined to turn her innovative idea into spondylix for her growing business. In the old Western movies, bandits would often demand a hefty sum of spondylix in exchange for hostages. This is an interesting word. Spondylix, dude. This is a hell of a word. I like this word. Next time you ever have to talk about cash, or you're splitting cash with someone or a friend, you say, yo, let's split the spondylix. Let's split instead of saying the bill, you split the spondylix. This is a good one. I like this word. Sounds dirty. Yeah, the dirty words sound the best. Next time a cashier is asking you for a payment, you tell her spondylix. So would you like to pay in cash, or would you like to pay in card? I'd like to pay in spondylix. They'd be looking at you like, dude, can you just pay and can you just I don't get paid enough to listen to you say this shit. Spondylix. I like this word, dude. I'm gonna find a way to use it. I'm gonna try to remember this word. Spondylix. Another word for cash. All right, there you go. That's the word of the day. Last look at the markets. We got Nvidia at 1,038. Everything else is pretty much red. Palantir 2073, SMCI 908, Shopify 58, TSLL 756, and Nvidia right here 1,039. Still up 9.5% on the day. On a date with a mitt, yeah. I'd be like, oh no, don't worry about it. I got it. I got the spondylix, and then I drop the Robinhood Gold credit card at the same time. We got to do that. We got to do it as well. Thank you, everybody. I'll see you guys at 3:45 p.m. Bye, everyone. Have a good one.